The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Wednesday, the 5th of March. I forgot to say the date each time I gave an update here. So we're looking at the Dow up 204 at 42,730. This is a good candle, but I don't believe from my analysis of the VIX index and other aspects that this is the low. I think it could be a low. There could be a bounce from here because we are in many ways oversold. We're going to see what happens. But most importantly, if the low of 42,347 from yesterday is taken out, then there's a 42. So was that 42.30? Yes, that was the low of yesterday. Then the low of 41,844 in the Dow from the 13th of January is liable to be hit. Now, most importantly, we've got some kind of a bounce. What did it say there in the den? Duncan Steve said services, PMI, Bloomberg, actual 51, forecast 49.7, previous 52.9. So kind of good. Reading that is stronger than forecast is generally supportive, bullish for the USD. So dollar, while a weaker than forecast reading, is generally negative, bearish. Okay, let's just see the dollar then. Dollar was getting tanked earlier on, still being tanked, double tanked, minus 121 at 104.53. That's a real problem. Okay, so let's get to this right now. I want to go through it. Let me go through quickly. The Dow right now is up 259. Nice action. I really toyed with this idea. We don't have any new longs in the Dow. We have a short position. Took a little bit, another little bit of a profit today at the open for the 2 times short, and we did the same thing for the S&P. Let's see what the S&P is right now. The S&P is trading up 25 at 58.03. Yeah, not bad. But this candle from yesterday just says, you have to break to new highs or new lows to get any kind of a trend change. And that would be over 58, 56, somewhere in that area on the upside. You can do that, but I'm just saying that's what it needs to do. That weekly chart has me worried because you've broken one set of parameters with this trend line right here. That support, you broke it. You've broken it over the last few days. And it's a weekly chart, so I have to wait for Friday. But the 9-period moving average is so close to turning negative. I've developed a lot more respect for having patience to see how things unfold using this 9-14 technique over a period of time. I was asked about the IWM. The 9-period moving average crossed negative about 3 weeks ago. And now that's the weekly chart, and you can see the turn down that has unfolded since then. Not only have we taken out the January low, we've taken out the, is that July? The September low of 204.21, and you've got all the way to the August 2024 low of 196.70. Remember, that's where we went long. We took profits on the way, but we did keep a small core position, and they got taken out yesterday also for a gain, but not why I should have taken the whole thing off on the doji candle and said, you know what, you can always get back in. I didn't do that. So I tend to do that very often, that we have positions that are fantastic. We get out of a good chunk almost at the exact top, and then we keep a core position. I mean, we're doing that with Bank of America. Normally by this time, we're out of Bank of America. Is that a spectacular gain from an entry point right there? You can see, look, right there. We got long in the monthly chart way back in 2024, and it ran all the way to 47.98. We've taken little bits off, kept the core position, and here it is at 42.25 under the 200-period moving average. The reason why I try to keep a core position, if I have either I'm expecting that over a period of time, the buying will come back into whatever the symbol is that we're following, in this case, it is the financials. And if you look at the XLF has taken quite a dive from the high that was made in the 52s just 3 sessions ago, slumping to the 49s. It's at 50 right now, up 9 cents. That weekly chart, that still made an all-time high this week before pulling back. So all of this is a work in progress. Now, the one that we don't have anymore is the KRE, the regional bank ETF. So that's the relationship I had of S&P 500 to the Russell 2000 as the money center banks of the XLF to the regional banks, the S&P Regional Bank ETF, the KRE, which is down 7 cents right now, testing again the 200-period moving average. There's the dreaded H. I've spoken about it a number of times today because I did Tommy's show as well. Look, this is the H pattern. You take out that left side low, and you can very well go to the 200-period exponential moving average of 55. It's at 58 right now. So I'm watching this very closely. The 9-period moving average, funnily enough, has not yet turned negative. The week is young. We're on Wednesday. Still got Wednesday and Thursday and Friday to go. So I'm watching this very closely. So with that said, I was looking at the different indices. So we'll go to the SMHs. SMHs are up $1.44 at 226.67. With all the talk of billions and billions going into all these different companies, this is really poor action. Look, you had the rectangle formation in the weekly chart. It started the dreaded H pattern, but it held very well. Then it made a lowercase h to an M. Finally, it took out the 230 level that I said was sacrosanct. You did not want to take that out. We took it out over the last 5 days, went under the 200-period moving average in the daily chart. This is something to monitor because where the semis go, usually, historically, you'd be looking at the market going in that direction. Well, this is the first time the semis never made new highs when all the other indices did. So this just says to me that I look at the semis as the oil of the 21st century, like oil was in the 1900s and the 2000s. So now we've got something added to that, which is chips. Everything except what you eat at this point has a chip, right? A microchip. So this is really important to the world economy. So this is just saying, you had all that talk about NVIDIA. NVIDIA stalled. It's having a lot more problems now. It's making this arch formation. Look, there it is, arch formation in the, there we go. Arch formation right there in the weekly chart. We made a peak F top in the daily chart at 153.13 level. It's trading at 116 right now. That's a problem. So I usually like, for those of you who like the high EPs, you've got NVIDIA. If you're looking at lower, then you're looking at GE. Well, GE is stalled, but it's still very close to its all-time high, trading at up 3.94 at 202.71. The weekly chart, well, the weekly chart is still young in the week, but if it makes a new high, that'll go to a D above the 212.19 level. Let me just type that in for GE. So while I'm talking about GE, let me talk about 117. Let me just talk about GEV. So this is General Electric. This is the aviation. GEV. Here we go. GEV is GE Vernova LLC. Look at that slide. This is the first time we've seen a couple of stocks make peak Cs at all-time highs and then fail. Very interesting. So 440s, and now it's down to the 322 level. Up 9, but down sharply. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back. Basil Chapman, Tiger Conditions, our checkout for opening call day newsletter. We've built up a nice cash position. We are short, but we're right at that stage where I'm watching weekly charts. This Friday is going to be so important because if the weekly charts start to see the 914s turn negative, that's not going to be good. And so far they're holding, and we'll see what happens. Let me just get to, I had a whole bunch of questions that I was asked and I was going to get to. I need to look down to see what I've written. Yeah, Costco. So Costco is trading right now up 60 cents at 1,037. Had a 1,063 round number high, which was, I think, then taken out. Yep. Where did we go? We went to 1,078.24. That was peak E. Now we're at peak F, 1,075 point something. I'll just put 04 because I think it didn't make a round number. Yeah. So what we're looking at is holding well, high-level consolidation. Leg F could be an alternate count in the monthly chart. And this is really the issue with the market. If you've got stocks, so whatever symbols you have that have held extremely well in the last few weeks, that's just saying that on any pullback, those are probably the ones that are going to come back very quickly when the market turns around. That's really an important facet of this particular phase. Now, the other thing that we're looking at is within areas that are like the sexy areas, like the quantum, QTUM, this is Defiance Quantum ETF. That's a pretty sharp pullback. There's the dreaded action. Remember the pattern I just showed you of taking out the left side low. On the monthly chart, this still looks like in 2025, there's going to be a pretty good rally. But right now, and we've been wanting to get back in. We were in and we got out, waiting now for a new entry. But I'm looking and I'm still waiting. So that's just something that says stocks that have weathered the storm that includes the tariff talk are telling you something, that they might at least be, for the moment, be free of the worries that investors have regarding anything that is tariff related. So now I need to just real quickly, Amazon is trading down. It was trading down sharply to the 200 period moving average yesterday. Now it's up $1.42 at 205.19. But the weekly chart has turned down so sharply, the 9-period moving average is still positive. This is another bit of a worry. Just on now it's going from short term to the intermediate term, because that's the weekly charts are intermediate term. Monthly chart still looks very good. Apple is down 4 at 231.80. Made a peak D. Remember, D is where other things can happen. Around about 350. I'm not sure. Let me just check this out. How about that? 250.00 round number high, all-time high. No, not all-time high. All-time high was a little bit earlier. It was in the 260 area or 259, 260.10. I may as well put that in, 260.10. So I'm watching this very closely because Apple, 260.10. In many ways, it's kind of changed its character, high-level consolidation, but electronic software, online services. But I would also say recurring income, a monthly income, that's really what it's, and it also gives a dividend. It's really changed its, in terms of the high-tech area. This is more the old fuddy-duddy, but it's holding so well that you got to respect that. But I think it's because of income. Remember, that's what happened to Microsoft a long time ago. So now Microsoft is way down from the 468.35 high of July of 2024, plummeted to 385 back in August of 2024, rallied sharply back to the 450s. Now it's taken out its left side 385.58 low. Yesterday it went to 381 round number low. I'm watching this because that round number low is saying there's a chance that it could have a decent bounce before it retests the 381 low, real long Microsoft from 338. But I'm watching this next rally to say, is that a rally that finally we can say the next move down is going to be very sharp? Or is this a rally that says if it does rally into the 410 to 416 area, that's where I want to do an analysis that says, okay, is it ready for the next big pop as a major tech company, Microsoft Cloud, operational systems, subscriptions, and it's really the subscriptions that is helping it. But it has a couple of problems over the last couple of months in that it gets hit by some kind of a bad news event. It's holding well considering. Next thing I want to look at here is, so Swim was a question earlier on. Swim is a company that Latham Group Inc. Swim is the symbol. They make pools and they do various things in the pools. Dan in the Den has given us a whole synopsis of what they're doing. Fabulous move up. Look at this, up 33% at 730, up $1.84. Now I followed this for years. You can't tell because the notation that I had for it, I must have lost that. It must be in one of my files somewhere. But I'll just do this real quickly, and I wanted to show you something very interesting. There are some stocks that are thematic. In other words, this is a swimming stock, right? A summer stock. And you would expect that it does the summer thing. Well, look at this. In wintertime, October of 2023, it starts a rally that goes all the way from a low of 2.04 all the way to a high in March. March? Are you kidding me? March is when you're getting ready for the pools. At March of 2024, it goes to 414. Hey, that's not bad, a double, almost. And then it pulls back really sharply and starts another move in May. Well, May is where you'd expect that there'd be that would be where the focus goes on pools. Well, yes, it does. A, B, C, D. And it goes where? It goes to November. Beautiful move. And it goes from 2.38 to a move into December of 841. Who would have thunk that it could rally into December? Come on. Who's swimming outdoors in September? Well, in December. Certainly not in the Northeast, but maybe in other parts of the country, down south maybe, or maybe on the West Coast. And then it pulls back. And what does it do? It goes to the low of yesterday, and that low is unbelievable. The low is 546. So it gets cut by more than 2/3, goes down to 546. And then it has the news today, I think it's earnings, big move up. So the question is, what the heck? And my answer is, I think it's going to digest these gains, and I wouldn't be surprised if it's in another few weeks that you really start to get the big move in swim. But this, celebrating the news, is a fabulous response. But I think a good part of it, if it breaks 650, it's at 728 right now. In the next, I'd say by next week, if it's broken that says, yeah, you've got to wait. But this is very nice action. Yeah, there's a head and shoulders pattern here, but nah, this is a great bounce. And the monthly chart went to a peak, A, B, C, D. All right, D, and it's consolidated. Yeah, looking very good. I'll be back in a moment. Dow's up 77. Dow, S&P's down 5.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Yeah, so a question came in about NVIDIA. If someone missed what I said about NVIDIA, what I was saying about NVIDIA is that the weekly chart last week went negative in the 914. The MACD's very weak. Stochastics at 44%, very weak. The on-balance volume's just already tanking. That's the blue line right there. That just says to me that there's a good chance that the next step for NVIDIA would be a test, unless there's something fabulous that happens in whatever the tariff, who cares what it is. If the price responds to whatever the news is and starts to get to the 127 area, that would be very important because 127 represents a close touch of the 129 9-period moving average, which is now under the 14. It's pink, so it's under the 14. And the closer you get to that, the greater the chances are that it could actually move a little higher. I think that's going to be tough to do. I think NVIDIA is in an area that says there is competition. There are other things going on. It isn't the focal point anymore. It just needs a well-deserved rest, and I think that's what it's got. So if it takes out 110 support, I'd be looking at, doesn't have to do it immediately, but a test of 100.95 is the low of the week of the 6th of September. So one step at a time. Doing okay right now. It's just unchanged at 115.79, but it's not a really great chart formation. There's the dreaded H. It took out the left side low. It closed above it twice, 3 times maybe. That's important. But I think it's going to go to lower lows. Maybe not that much lower, but lower lows. Okay, I hope that helps you. Oh. So the question is, if you have some in, say, the 110, 108 area, what I'd be looking at is some portion of it. I'd have a trading stop. I'd let it do whatever it's going to do. If there's a nice spike later this afternoon, Trump, could come out with a reassessment of the tariffs. The market could love it. I mean, it's all a work in progress, and it's going to be that way for a little while. It's not like one day resolves everything. Then what I would say to you is have a trading stop. But the core, I would not take a loss on your position. So if you have some in that area, if it comes down to a little bit of a profit, I'd take that profit. You can always get back in. Maybe you won't get into the same price, but I'm saying that I'd be a little cautious because it's in that semiconductor area that says, I mean, look at advanced micro devices. I don't want to do it now. I don't have time. But I will do it. I'm going to do it very quickly. Advanced micro devices hit 227.30 back in March of 2024. It's trading at 99, more than cut in half. And look what happens to wonderful companies like Advanced Micro Devices. I won't go through it now, but I'll just show you the chart. You can just look at the assessment. It goes from the ones back in 2008. I can go back even earlier. And it has a screaming rally, and then it comes back sharply. Then it has a screaming rally. And then since 2015, the rallies have gone to big double digits. It goes, first of all, from the ones to the 15 area back in 2017, pulls back. Then it screams up to 34.14, pulls back, gets cut in half. Then it screams up to 164.46 in November of 2021. And then it plummets down to the 55 area. I mean, these are big. It goes 2/3. And then it rallies all again to 227.30. And now it's back down very sharply. And it's a great company. And I spoke about it when Sanders was the CEO. I followed it for decades and decades. So it has these huge moves. And this is a great company. So one mistake in semiconductors, and you just looking and you say, what happened? Where did my price go? So this is the same thing. So I'm just saying the semiconductors in general, but NVIDIA, semiconductors overall, but in NVIDIA in specifics, not breaking down, but having a really good digestive phase. And at 116, I would just have a trading stop on some of the position, but your core position, I would not take a loss on that because I think you can always get back in. Next question came in, GME. GME. Oh, GameStop, huh? GME. Is this back to the... No. Okay, yeah, GME. This is a story stock. It's really, I used to have this one well notated. I mean, here's a stock that in 1 month goes from the 10s to 65. I mean, and then back it down again to the 20 area. Excuse me, never took out the low. But look at the 200 period moving average hour. It keeps arching over and keeps coming down. All right, let me just put it this way. Let's just say you're a long GameStop and you got in long yesterday in the 24 area. It needs, the 200 period moving average is like a magnet. It needs to power right through, but right through means it's actually got to take out the candle of 3 sessions ago with a high on the third of 25.48. Well, this moves so quickly, it could easily do that. If it does it, let's just say you're long, I would grab another position right there and a trading position, keep this as a core and just let it go. Let it rip, because at some point it comes back down again, but grab profits with this as you can. And if you can't keep a core and that core holds for a little while, maybe it has a move that was much like October, which went all the way from the 20 area up into the high 30s. But it's a story stock. I see there's a GameStop in the Chestnut Hill, Newton, Mass, Chestnut Hill Mall. I don't ever see too many people in it, but it's still there, so they must be doing okay. Now, the next question came in. Could I look at, let me just sell all. Oh, okay, good. I mean, taking profits, I don't see how you can go wrong. The reason why I should have mentioned this, the reason why I want you to keep a little bit is that you have a profit, and if anything happens this afternoon, even though I'm saying this is not the low, it could be a low, we don't know yet, NVIDIA would be one that actually moved high. But okay, profit's a profit. All right, question about Boeing, BA. So I've looked at Boeing for quite some time. I was on Boeing. I must say that the Airbus, just for me, the Airbus was way nicer. It just, the seats were better, the space was better, the way it was fitted was better than the Boeing 188-48, 188-66. So that went to the D right there. A, B, C. Oh, and it did another D right here. Okay, so that's Boeing is trading right now. Let me just finish this. A, B, C. There's your D. So that becomes a pullback right there from the 188 level. Double tops. These double tops are amazing. Oh, wait, before I forget, I always do this. I forgot. I want you to do H. Look, H. Look at this double top. 168.10 with a 168 round number open on Hilton. 168.20 was its high in 2024. 168.10. And look at this pullback from the 168 level down to 138. So let's just go back to what we were looking at, if I can actually remember what we were looking at. Boeing. I'll talk about that in a moment. I don't think Boeing is a buy right now.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master.
Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back doing Boeing, but I just want to finish. I don't know if this was a question, whether it was a mistake or what, but WY was also mentioned, and that's Weyerhaeuser, so we'll get to that in a moment. I've followed Weyerhaeuser for years, only in the sense that it pops up and I say, oh, yeah, but we've never bought it. Let's go. So Boeing, as I see it, it was holding very well and it was on my list as a potential buy. I think that there's just still so much going on that it's a difficult buy. That's number one. And since I flew in that Airbus, I'm saying to myself, gee, I prefer that ride. Anyway, so that was unfortunately the shorter run, not the one from LA to Sydney, 14 hours. God, it's a long time. All right, so there we go. Boeing, I'd give it just a little bit more room, and time. I think Boeing is in the category that should benefit from everything that's happening, coming up over the next couple of months. But boy, they've got a lot of overhead news, bad news to overcome. And I don't know if they're going to be able to do it. The chart was actually holding better, but the last 2 sessions said nope. It needs much more for me to get interested again. So Weyerhaeuser is a little different. So I can't remember. They're in the industrial area, made a little double top there. I was talking about double tops in the 31 area, and then it pulled back from the February and March highs. I'm intrigued with this. I don't like the arch formation in the monthly chart. The arch formation had a successful left side, right side test, and it's now making the second arch. So I'm not sure if you're in it. If you're in Weyerhaeuser, I hope it's lower down. If you're in Weyerhaeuser and you're actually at a loss, I would put a stop. It's at 30.71, because if it takes out 30.47, that's going to be tough. That's just going to be tough. It's going to struggle for a little longer, and then it could make a lower arch formation. But if it's able, I would be very impressed with Weyerhaeuser if trading right now at 30.93, if in the next week or two, all of a sudden I'm looking and say, oh, I forgot about this. It's tackling that left side high on the week of the 4th of December, which is at 32.20. And that's not very far, you're a point and a half away. If it can get there, that monthly chart will will start to improve because the weekly chart then becomes from an arch. This is what we look at. Remember, the sine wave can continue over and over and over. You've seen that, in fact, in a number of charts. I could show you the weekly chart of the diamonds. So this is the pattern that we're looking at. And this is the pattern we're looking at. And this is the chance that it could actually start a cup formation. The cup formation says that by the third week of March, if it's over 32.30, then you're actually looking at a rally going into April that could take it to the 34 high that was made, 33.90, 34 high that was made back in October of last year. But this is all looking out the level it has to match. Today, look, it hit 31.27 as a high. It's trading now at 30.91. It had a low of 30.61. So it's struggling here. And but if this whole candle was up here and it actually made a new high today, I say, this is really looking good. So it's a work in progress in the sense that the 200-period moving average, the sine wave has kind of gone over and under and over and under. It went over it for 3 days and in the weekly chart, and now it's under it. So it needs a little more work. But if you are long from lower down, I'd say try to hold it, because if it's able to have a bit of a rally this week, preferably in the next 2 days, back into at least half of today's wick, into the 31.10 area, I'd say that's really good action. I'm putting it down here as a stock to watch. How's it? Okay. Next, XPEV. I did this in the show earlier when I was doing Tommy's show. I said, Speng. I'm not even sure how you pronounce it. I seen they had an advertisement. I didn't see I didn't see the showroom, but I saw an ad on the Crown Casino, huge building, massive building in Sydney, Australia, and I've seen the car a couple of times, not enough to say, oh, it's so familiar in my mind that I can pick it out anywhere. Speng Inc. designs, develops, manufactures smart EVs. I'd say this is the one stock in the China market that at least I follow, that I say I have a lot more confidence that this is a company that has done well and it could continue to do well. So it's trading up $1.38 to 21.59. I like it very much. It means that the 20.25 to 19.52 area is very strong support. If it closes in the next week under 19, that's a problem. And it's a problem not intermediate term, shorter term, it's a problem. The weekly chart is still very strong. I like it very much. We don't own it. I don't have any Chinese stocks. I'd mentioned that we've got enough to watch with American stocks. The USA companies, not all of them are US owned, but they're traded here. But this is looking good. And Baba is the other one, Alibaba. The only thing about Alibaba is, there it is. I needed to see how to make the cup formation in the weekly chart, and that's a fabulous cup formation. So that's very positive. And on the shorter term basis, 138.35 up 850. You've got this pattern right here. It's just breaking the Chapman wave inside wedge breakout pattern. The day's young, but if it closes any weekend, the 138 or higher, that says the next level of resistance will be 141.95, and then the high, the recent recovery high, multi-year high actually, at 145.30, that is starting to become a focus. If it can close by next week, if it can close in the 151 area or higher, that is really good action. But if it starts to pull back, watch 120. Next question came in. Baba, also having a good day. Yes. So a question came in about IWM. Yeah, so you remember, I don't want to go through this over and over. I've spoken about the XLF, the financial money center banks, and the KRE regional banks. I want you to see the disparity between leadership in the big ones come in the smaller ones so that they can have a really good rally. I think in 2025, that's what I'm looking for. We've tried it before. It hasn't worked. The IWM is the relationship of the S&P 500, the biggies, doing well, and then the IWM, the Russell 2000, just struggling. Well, it's still struggling. And until I see a weekly close in the 219 to 221 area, I have to say it's a struggle. It's a real struggle to get sustained. You've got the dreaded H pattern and broke down. It's not working. It's just not working, and it will at some point, but it isn't yet. And we've given it our best. We took really nice gains, right almost all the way to the top. We even had a TZA at one point, and then I held it, it was an emotional thing. I was trying to give it my best, and then when the 9-period moving average went weak back in the 223 area, that was the sign to say, this is really fading. So IWM, I don't see anything yet. I'll be back in a moment. Dow's up 102, S&P's down 1.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So FXI, which is the iShares China Large Cap ETF, has done very nicely. And this is making that U-shaped pattern, trying to get to the 3750 area. It's at 3637. Key support is in the 35s. Question came in. I just need to get to that right now. Where was it? Okay. Just saw it a moment ago. Oh, that's a Bitcoin. Yeah. Gee, I keep forgetting about Bitcoin. So, yeah. This is trading up $1,715 at 89,045. I've said for a while that it's stuck in this range, and until it's, in this particular instance, it's making lower lows and lower highs. If it starts to trade in the 97,500 area at any point in the next 2 weeks, it has to do that for 2-3 sessions. That'll be a game changer to say, Now there could be a really good bounce. We are still long our position, taking profits off almost at the highs, but we kept the core position. That's the way I want it because we're in low enough. So we've got to look at the IAI, and this is the clue to me that the market is still weak, has had a big pullback from 159.90. That's the iShares broker-dealer ETF and securities. If it takes out the low that was made yesterday, in other words, if it goes under, and let me just say, if it goes under 142, that's going to be a big problem because it will test that 139 area low that was made late 2024. And this is saying that we aren't quite ready for the big move up because this is the public, and the public is seeing a big pullback here. The next question came in. Oh, where did it go? Oh, that's right. So SECO, I said to subscribers today, we'll be looking at this. Is this just is this high-grade copper having a one-off, or is this saying, hey, in the commodity area, we're looking at something really spectacular. Copper's coming back. That's going to be very important. So let's see how copper acts over the next couple of days, and if the stocks, as if this is like gold and the GDX, which failed to follow gold, or it's done okay, but it hasn't done the same thing. Is this copper doing well, and then the stocks just don't participate? We'll see in the next few days. Stay tuned for Steve Rhodes. It should be a wonderful show as always with Steve. I'll be back